Good evening, everyone, and welcome back to Funding Fridays Live, Access to Capital. I'm BB Brown, and if this is your first Funding Fridays, welcome. I'm glad you're here. Funding Fridays was created to have real conversations with entrepreneurs and business owners about business funding, access to capital, preparation, positioning, and making informed financial decisions. I want to make something very clear throughout this series. This isn't just about getting money, it's about understanding money, understanding your options, and knowing whether a particular funding option actually makes sense for your business. So, whether you need funding today, 6 months from now, or you simply here to learn, you're in the right place. Tonight, we're continuing the conversation with week 2, Instant Funding, Understanding Giggle Finance. For those of you who are meeting me for the first time, my name is Benquita BB Brown. I'm the founder and CEO of W.I.N, Wealth is Necessary Enterprises. And I'm also a certified broker with David Allen Capital. You might hear me say DAC. A big part of what I do is connect entrepreneurs and business owners with information, resources, funding opportunities, and relationships that can help them grow. And you'll hear me say this all the time. One conversation can change everything. Sometimes you simply don't know what opportunities are available until somebody gives you the information. And that's exactly why I created Funding Fridays. David Allen Capital gives business owners access to different types of business funding solutions. But here's something I want you to remember throughout this entire series. Funding is not one size fits all. Two business owners can need the exact same amount of money and potentially have completely different funding options. Why? Because they may have different revenue, time in business, cash flow, credit profiles, banking histories, and existing financial obligations. That's why throughout Funding Fridays, we're following 4 rules: learn, prepare, position, access. We learn first, we prepare our business, we position ourselves, and then we explore access to capital. The big lesson for week 2. This is really the lesson I want everybody to leave with tonight. A lot of business owners start with one question: how much can I get? But that's not the only question we should be asking. What options do I qualify for? What will it cost? How will I repay it? Does that payment fit my current cash flow? And most importantly, how will this capital help my business grow? Because getting approved for money doesn't automatically mean taking that money is a good business decision. Tonight, I want us to start looking at funding differently. We're not asking, can I get the money? We're asking, does the money make sense? So, know your funding options. There are different funding options because businesses are in different financial positions. You may have an established business with strong revenue and credit. You might have a growing business that isn't quite there yet. Or maybe you're self-employed, you're generating revenue, but you don't meet the requirements from some larger business funding programs. That's why understanding your business profile matters. Your revenue matters, your banking matters, your credit matters, your time in business matters. Tonight, we're going to focus specifically on giggle financing and where it may fit. But remember, just because one option doesn't fit your business doesn't mean there aren't other options to explore. Understanding Giggle Finance. Giggle Finance is an alternative funding option designed for certain self-employed business owners. And here's why I want to teach this particular option. Sometimes business owners hear business funding and immediately think, I probably don't qualify. Maybe your business isn't doing $15,000 or $20,000 a month yet. Maybe you're self-employed. Maybe you're operating through a personal checking account. Or maybe your credit isn't where you want it to be yet. That doesn't necessarily mean there aren't options to explore. Depending on your overall profile, Giggle may be an option, but I want everyone to hear this. Meeting minimum qualifications does not guarantee approval. Your complete business profile still matters, and underwriting ultimately determines what, if anything, is available to you. Now, let's talk pre-qualification. Before we even get deep into an application, there are 4 questions I want business owners to think about. Number 1, whose name is your bank account in? Personal name or business name? Number 2, during the last 90 days, what was your lowest month of revenue? Notice I didn't say your best month, I said your lowest month. Why? Because consistency matters. Number 3, how long have you been in business? And finally, what is your approximate FICO score? Before we even talked about an application, we learned 4 important things: banking, revenue, time in business, credit. Those 4 pieces can tell us a lot about where we may need to start. Giggle Instant Approval also offers same-day funding for self-employed business owners. Giggle may be an option if you have 3,000 plus monthly sales, if you're using a personal bank account instead of a business bank account, and or your sales is under 15,000 a month with your FICO score under 550. Remember, smaller revenue, lower credit, more options to explore. Now, let's look deeper at the minimum requirements. Giggle may consider a personal or business checking account, but online banking needs to be set up. We're looking at least 4 months in business, at least 3,000 in monthly sales, regular revenue deposits, and your banking activity. Now I want to stop on banking activity because this is important. NSF means non-sufficient funds. In simple terms, there wasn't enough money in the account to cover a transaction. Funding providers may also look at negative days, how often that account falls below 0. Why does that matter? Because they're trying to understand the cash flow of the business. They're asking, is money consistently coming into this business? And can this business reasonably handle another payment obligation? So when you're preparing for funding, but only think about your credit score. Don't only think about your credit score. The health of your bank account matters too. So let's recap. Minimum requirements: personal or business checking account, online banking setup, 4 plus months in business, 3,000 plus monthly sales, 4 plus revenue deposits per month, minimum NSF negative days, no more than 5 NSF or negative days in any of the last 3 months. Also note, current capital events. If you currently have a capital events, the remaining balance will be considered and may reduce the approval amount. Also, very important, Giggle does not fund in New York, California, or Oregon. Okay, now we're getting to the part everybody wants to know. How much money can I get? With the Giggle option, we're discussing funding can potentially go up to $10,000. But your actual approval depends on your complete business profile and underwriting. Now look at the example on the screen. You received $10,000, but your total repayment is $13,900. That means you're paying $3,900 above the amount you received. And this is where I want you to slow down. Don't just look at they're giving me $10,000. Look at what am I paying back? How often am I paying? Can my current cash flow comfortably support that payment? And most importantly, what am I going to do with this $10,000? Because capital has a cost. And we're going to talk about whether the financial benefit you expect from that money justifies the cost of accessing it. So, repeat, Giggle Finance, same day funding up to $10,000. Approval amount is typically 25% to 75% of your monthly revenue. Example, 14,000 monthly revenue up to 10,000 advance. Actual approval may be lower depending on your business profile. Repayment is approximately 1.29 times or 1.69 times the advance. The average is 1.39 times. Please, please, please listen carefully. Term and payments. 3 to 6 month term, automatically weekly payments, and early payoff discounts may be available. Very, very important. The Giggle Finance does not offer monthly payment options. The Giggle funding process. Now, let's say you looked at everything we discussed and you decided, okay, BB, I want to explore my options. What happens next? Let me walk you through it. First, we start with those initial pre-qualification questions. If Giggle appears to be an appropriate path based on the information provided, you will continue to Giggle's online application. You may receive a preliminary or soft approval based on the information you stated. But we're not finished yet. Next, you'll link your bank account so the financial information can be verified. Then you may receive an actual funding offer. And this is where I want you to slow down. Read the offer. Understand the amount. Understand the total repayment. Understand the payment frequency. Ask questions. Receiving an offer doesn't mean you have to accept it. If you decide the offer makes sense, you'll receive your contracts, complete the required documents, and finally, underwriting. And once everything is approved, funds can be sent. The process can move quickly, potentially within the same business day in some cases. But remember, fast doesn't mean rush. Fast access to capital is great. An informed decision is better. So let's recap the Giggle funding process. Application. Offer. Complete first 4 Bank Breezy questions. Continue to Giggle's online application. Receive soft approval based on stated information. Link bank account for verification. Receive funding offer. Offer/funding. Accept offer and receive contracts. Sign documents and complete final underwriting. Funds are sent to the client. Remember, timing is as fast as 1 hour and is usually within 1 business day. Before you apply for funding anywhere, I want you to know your own numbers. What has your revenue looked like over the last 3 months? What does your banking activity look like? Do you currently have another business advance? Have you had previous issue with business funding? But here's the question I really want you to think about. What do you need the money for? Don't just tell me, BB, I need 10,000. Tell me what that 10,000 is going to do. Are you purchasing inventory, buying equipment, launching a marketing campaign, fulfilling a contract, expanding? Maybe you're hiring, because getting the money is not the strategy. What you're going to do with the money is the strategy. So let's repeat those questions. Question number 1. What has your revenue looked like over the last 3 months? We don't just want to know your best month. We want to understand the consistency of the revenue coming into your account. Question 2. What does your bank activity look like? NSF means non-sufficient funds. Providers may look at overdrafts, return transactions, and how frequently your account goes negative because your banking activity gives them insight into the cash flow of your business. Question number 3. Do you currently have another business advance? If you are already making payments on existing business funding, that matters. We need to understand what's still owed and what your business is already responsible for paying. Question 4. Have you previously defaulted on business funding or been reported to Data Merge? Data Merge is used within the alternative funding industry to share certain businesses' funding history. Previous defaults or other reported activity can potentially become part of the underwriting conversation. Then, here's the best part of the pre-qualification sheet. What do you need the money for? Now you're getting what I believe is one of the most important questions on this entire form. What do you need the funding for? Don't just tell me, BB, I need 10,000. Tell me what that 10,000 is going to do. Remember, we talked about, are you going to be purchasing inventory, equipment, launching a marketing campaign, fulfilling a new contract, expanding, hiring? Because getting the money is not the strategy. Remember, what you're going to do with the money is the strategy. Now, let's take that one step further. Imagine 10,000 hit your business bank account tomorrow morning. What are you doing with it? Actually put your answer in the chat. Inventory, marketing, equipment, hiring, expansion, fulfilling a contract, or something else. Now here's my second question. How is that $10,000 going to help your business make money? Because if you're going to take capital and pay a cost for that capital, what do you reasonably expect that money to produce? If you're putting $10,000 into inventory, how much can you potentially generate by selling that inventory? If you're investing in marketing, what's your strategy for turning that marketing into customers and revenue? If you're buying equipment, how would that equipment help you increase capacity or generate additional income? Remember our example. If you receive $10,000, you're responsible for $13,900 in total repayment. I have to ask you, does the financial benefit that you expect from this $10,000 justify the cost of assessing it? Every dollar you borrow should have a job. Can I get funding? This right here is probably the biggest takeaway from tonight. Can I get funding is not the only question. The bigger question is, what will this funding do for my business? Capital should have a purpose, plan, and a financial goal. Maybe $10,000 allows you to fulfill a contract that's going to generate $25,000. Maybe you're purchasing inventory you know you can sell. Maybe you're investing in equipment that allows you to serve more customers. That's strategic capital. And here's something I want every entrepreneur to remember. Just because you qualify doesn't mean you should take it. Can your current cash flow support the payment? Can you afford that payment even if the additional revenue doesn't come as quickly as expected? Do you understand your total repayment? And do you have a clear plan for the capital? If you can't answer those questions yet, it may be worth slowing down before accepting an offer. Qualification is only half of the conversation. Tonight we focus specifically on Giggle Finance and an option that may work for certain self-employed and smaller business owners. But what happens when your business has stronger revenue, more time in business, stronger credit, and a different financial profile? That's where other funding options may come into the conversation. And that's where we're going next. Next Friday is week 3. We're going to be discussing Bank Breezy. We're going to take another step up the funding ladder and start exploring flex rate funding and core rate funding. So if Giggle isn't the right fit for your business, don't count yourself out. It may simply mean we need to explore a different path. As we close tonight, I want you to remember something. The goal isn't simply to get funding. The goal is to make a decision that makes sense for your business. Funding can be a tool. It can help you purchase inventory, invest in marketing, buy equipment, take advantage of an opportunity, expand, or create momentum. But capital works best when there is a strategy attached to it. So don't chase money simply because it's available. Understand it. Understand the cost, understand your cash flow, understand the opportunity, and know exactly what you want that capital to accomplish. That's what Funding Fridays is about. Learn, prepare, position, access. Thank you for spending part of your Friday with me and being part of Funding Fridays Live. Invite another entrepreneur or business owner to join us next Friday because we're going to continue building on everything we learned tonight. And always remember, because one conversation can change everything. I'm BB Brown. Stay encouraged, keep building, keep positioning your business, and I'll see you next Friday for week 3, Bank Breezy. Access to capital starts here. Have a great night.